customer relationship, credit review support. There are 6 functions that have generated that 2%. You assign a weight of the proportion that each of these functions have played a role in generating that 2%. So for example, based on business discussion with business guys, the business guy says that the weightage that client origination plays is 20% in the whole value chain of that 2%. And they will assign weights to each of the functions. Credit review support also plays some role, but it's a routine function, so cost plus would be a more appropriate way. So you assign weights to each of the 5-6 things that have gone into creating that 2%. And you identify who has done those, India or Singapore. And if both have done those, what is the proportion in which they have done it, which will be based on a detailed functional analysis. And you will come with a nice matrix which will give you a breakup of that 2% by these 6 weights, and these 6 weights into India and Singapore, and you will get a number of that 2% which should be attributed to India. And the OECD accepts this approach. It's called the contribution analysis approach in profit split method. Okay, should we move to the next one?
So just one last question. Is it then how do they factor in the risk factor? For example,
that 2%, the risk is in the interest. The credit risk is in the interest. If you go back here, the credit risk, interest rate risk, and liquidity risk is in the interest income that the foreign bank branch earns. Whereas the reputation risk are actually being borne by both of those guys. But India has originated it, so India also bears that part of the reputation risk. But what the OECD says is that if you break it down by functions, that these are the 5 functions that have generated. So for example, in the function the risk is embedded, right? So doing a credit review support entails the risk that you will go wrong. You do a wrong credit review support. But who will bear that risk? Singapore branch, because I don't have the loan on my books. So when you assign weights in credit review support, she made a point, somebody highlighted that the credit review support is being done by India. I said, India is doing a support, Singapore is doing the review of that and taking the final decision on whether the credit needs to be gone or not. So the weight that I will assign between credit review as one of the functions, I'll say India 20%, Singapore 80%, because they're taking all the significant people decisions relating to credit review. So it will get subjective, I'm not denying that, but this is more scientific than saying 2% or nothing, or a pure TNMM used to work actually in the old days. In fact, to share with you, in the old days people also used to argue that I should get nothing. People have traveled. So in the initial years of transpricing, they used to say I should get nothing. Then they say cost plus milna chahiye. But both of those answers don't seem to be right, depending upon actually what is being done in India. If it is pure referral, but normally it's never pure referral. There could be some cases where the bank is so small in India and somebody just walks the door and says, I want a foreign currency loan, and the guy says, okay, here's my Singapore company visiting card. I mean, that's not how loans get sold anyway. But if those were the facts, then you will have simpler answers. But normally the facts are not that simple. So in the interest of time, let's move to the next one. I want to move to the brokerage one. Actually, cost allocation, let's not spend time, because cost allocation is a standard issue, right? Costs are allocated from foreign company to Indian company has to prove the benefit, documentation, cost allocation key, CA certificate. It's all the routine stuff. Should I spend time on brokerage? That's a very interesting one. Okay. So see this is on slide 21. Just take a minute to read the text on the slide. Again, I'm trying to ensure everything's away. And I'm indirectly telling the organizers that this 2 to 3:30 slot is a difficult one.
That's why we have seen it.
So what are the facts? Indian broker, who's a subsidiary of a foreign MNC, has local clients, UTI, LIC, who trade on the stock exchange through the broker, and they give a brokerage rate, they earn brokerage from these third parties. The FIIs abroad also trade on the Indian stock exchange, and they have to trade through a broker. So there are some FIIs of the group. In the group itself, there are a lot of FIIs who trade on the stock exchange, and a lot of times they will trade through the Indian group company broker. and the Indian group company broker will charge them a brokerage rate 0.02. I don't trade on the stock market, so I don't even know what brokerages are going on right now. But I'm saying 0.02 for example, 2 paisa on a rupee, on 100 rupees. So they will charge a brokerage rate to the foreign FII client who's a related party. They will also have FII clients who are not related parties, and they will charge a certain brokerage rate to them. So you have 3 transactions: brokerage services or brokerage from foreign FII related party, brokerage from foreign FII third party, brokerage from domestic companies, which will normally be unrelated. You could even have related, but it's very small portion. So the question here is very simple. You have to benchmark the brokerage charge to the foreign FI related party and conclude that it is arm's length. That is the question. So what are the approaches? Let's do the same thing we did. Let's hear all the approaches. Internal cup being
third party FI.
Third party
assessments.
third party FI. Okay. How many people say you can also do an internal cup of? So let me go back to the discussion we had in IT/ITS. We said you can't compare the domestic market with the foreign market, but this is the domestic market only. This is inbound trading happening on a domestic stock exchange. Stocks of the Indian companies being traded. Why should a foreign FI pay more than what domestic financial institutions are paying? Why will he pay more? I mean, is there a difference between the export market and domestic market here? See, in the IT/ITS example, services were being provided and consumed in the US. Here, where are the services being provided and consumed? India. Is the brokerage, that activity they do for a domestic client, different from the activity they do for a foreign client? So I'm challenging why it should be.
To the extent that when he sells stocks, he will have to probably convert into foreign currency.
He doesn't bear the foreign exchange risk ever. Brokers will never
But
bear
some
that.
kind of admin work that he would have to do when he has to probably, say if it's an HNI, and I have
But that will be
to
done by the
issue-
custodian. All that work is done by custodians. Brokers don't do that. Brokers don't transmit money. Custodian holds the money and sends sale proceeds abroad. So that's not a good difference. But so you're saying, no, I'll come to volume, but we are on the question whether she said internal cup, but should the internal cup be domestic clients or third party foreign clients? Is there a view on that?
Third party.
After all I said, still third party foreign clients. You're not convinced. Good. Okay, we'll go with third party foreign clients. I'm a reasonable review. But so should that be the end of the discussion? Or are there? Let's take a step back. How does the brokerage business work? You and me, when we trade on a stock exchange, ICICI gives us a rate. So it's a rate that I'm buying. I compare ICICI to HDFC, and I say ICICI is giving me 0.05, HDFC is giving me 0.04. HDFC is better. Service is online. इसका technology better है. पैसा जल्दी credit हो जाता है. I am able to call up someone and solve problems. So I'll go with HDFC, or I'll go with ICICI if all that is better even for a high rate. How does the institutional broking business work? Do you think the institutional clients, FIIs, UTIs, LICs, do you think they buy a brokerage rate?
Yes, fine. Otherwise, it's in their cost.
What are other things?
Freebies.
Freebies. What are they getting from the broker? Just the ability to trade on a stock exchange. But and everybody here may not understand the industry, so let's be fair to them. Let's take a step back. Do you think when UTI goes to a broker and says, I'm going to do 20,000 crores of transactions, do you think, and sir made a point of volume, do people buy brokerage rates at such high volumes?
Research report and all.
Research report, access to companies. How much access will you give me to Reliance? Will you ensure that I am present at all analyst meetings, or I'll be the first set of, because that's what my UTI wants to take, be the quickest to take a decision when to buy or sell, right?
But warehousing is
Okay, warehousing, it's not a non-routine function. Fair point. Let's come to the non-routine ones. Access. Do you give me access to the latest political developments or your analysis of the latest political developments? Will I be the first set of people who will receive your reports, your research reports? Brokers don't charge for research. Research is a free service without service tax, fortunately. But what do institutional clients pay for? Do they pay for broking? They don't pay for broking. Broking is a very small part of what they pay for. I mean, I can share with you that if you go to a large broking firm, they have a menu which starts from here, which is a diamond category client. And they have 20 things they will do for diamond category clients. One of those things would be that when trade delegations come to India, you will ensure you are present in those meetings. So you have access to the latest developments that are happening. There will be next category of clients where out of those 20 they will do only 16. There will be the last category where they will do only 5. There will be one category where they will say, we will give you only 3 analyst meetings every year. One category where they will say, I will give you 7 analyst meetings every year. It's a menu you pick. And it's a menu they give depending on how much volume you are willing to cover. You do 10,000 crores, I will put you in the top category. Because 0.02 of 10,000 crores is very different from 0.02 of 2,000 crores. So I'll put you high up there and I'll give you, this is how we deal with our best clients, right? You're giving them a tax return only, but look at the value added services you're giving them. I'll come to your home to pick up the return information. I'll come to your home to, I mean, we do all that stuff. And that's how broking works. So fundamentally, brokerage rates are not comparable. I'm making a very strong statement, but fundamentally they are not comparable. How can they be? I always work backwards. When I look at LIC as a client, I'm a broker, I say, ये 10,000 करोड़ का धंधा करेगा, मैं 0.02 चार्ज करूँगा तो मुझे 200 करोड़ मिलेगा, 200 करोड़ के लिए मैं ये सब करूँगा, और I will say कि मेरे को LIC से कितना कमाना है, 200 करोड़, 400 करोड़, I will say how much business is going to do this year, 20,000 crores, then I can charge him 0.01, because on 40,000 crores, 0.01 will give me 200 crores, but he's going to do only 20,000 crores, so I have to increase my rate, because I want to earn 200 crores from LIC. Because I'm doing all these 16 things for them. So this is the play. This is how the industry works. And this is why industry analysis is important. You can't do any functional analysis, especially financial services. It's so peculiar. Unfortunately, and you know, in the developed world, can you imagine, take a guess, what methods are used to benchmark brokerage rates? People said cup. TNMM is written here on the slide itself, so these two are there. Profit split methods. So, without getting into the details, what transactional net margin method is actually the most superior method, because at the end of the day, I want to make a certain amount of profit after factoring in the cost. And if the amount, and as a businessman, I will say how much will I have to spend to serve LIC? I will earn a brokerage amount to cover my cost and earn a certain profit, and I will convert that brokerage amount into a rate depending upon the turnover he is going to do. And the rate will keep on changing based on the volume he does with. So you can't fundamentally compare brokerage rates. And TNMM then becomes the most appropriate method, because then you come down to the how much profit I have made and do that comparison. So break your P&L into the profit you earn from domestic clients, the profit you earn from third-party FI clients, the profit you earn from your related party FI clients. And if you earn the same amount of profit, then the rate ought to be comparable and at arm's length. That to me is a good answer. Unfortunately, this dispute has been there for years now with the department. Department uses CUP and says brokerage is brokerage. You can do internal CUP. And in CUP they play with whether it should be domestic clients CUP or foreign clients CUP, whether they should bucket the CUPs डिपेंडिंग अपॉन वॉल्यूम्स के 1000 करोड़ तक का बिजनेस है तो ये आपका ब्रोकरेज रेट है थर्ड पार्टी को, 1000 to 5000 करोड़ का बिजनेस है तो ये आपका ब्रोकरेज रेट है थर्ड पार्टी को, एंड सो ऑन एंड सो फोर्थ. And they have applied it and they have won at the tribunal also. RBS is a landmark decision of the Mumbai tribunal where they have upheld CUP as a method. But fortunately, with one caveat, they have said you can make comparability adjustments for the kind of services or expenses you incur to earn that income from a third party versus a related party. So, and they have remanded the case back. So they said they did not agree with me that a TNM should be the appropriate method, which is what we argue. They said CUP is the most appropriate method, but you can get adjustments for all these differences. Now, you will have to go a long distance to convert all of these differences into a brokerage number. It can be done. It's not impossible because you can always convert an expense number into a percentage of the broking fee. And you can make adjustments, but it becomes extremely tedious and subjected to that. But that's the guidance the tribunal has given, unfortunately. So, very interesting dispute. But at least for me, the learning was that if you don't understand the industry, you will never get the method right. Fair point? Okay. We are 15 minutes away. Let's take up one more. I'll take up this one. It's actually very close to ITITS. So okay. Can you just spend a minute reading this slide number 22? Just pay attention to the right hand side as much as to what functions are done outside India and what functions are done in India. So this is an industry where funds have to take decisions on which Indian companies to invest in. This is private equity. So they need somebody on the ground who does a lot of the research, discussions with these investee companies, interviews, their own, local sounding, and come up with a recommendation कि ये 10 companies में the private equity fund, which is typically set up outside India, can make an investment, and it's advisory. So they give recommendations which are non-binding. They give 10 recommendations. The fund may or may not accept any, or it may accept 1 or 2. Now, profit split is not my favorite method. I just want to clarify again. But let's have a discussion based on what you read here. And I also want to tell you, you see this investment advisor just above the outside India line. So funds, investment manager, investment advisor. So there is a fund which is the vehicle that pools all the money of the third parties who want to invest. The fund appoints an investment manager to manage the fund. The investment manager, typically the model is 220. So he earns 2% of the fund under management and he earns 20% of the profit made. Now this can change, right, based on negotiation, how good he is, how new he is. It can be 110, it could be anything, but let's live with this 220. So 220 means 2% of funds under management, 20% of the profits made. And that it's 2% is annual, it's not one time. You raise a fund in year 1, but you earn 2% every year till the fund sort of dies down. The investment manager appoints an investment advisor to give, recommendations or to make investments recommendations to the board. The final decision will be taken by the investment manager. The investment advisor will then appoint a sub-advisor, which is in India, which will do the functions of what I said earlier: preliminary analysis of potential investing companies, meetings with them, monitoring the investments once the investments have been made. Some people from the investment sub-advisor may even join the board of directors of the companies because that helps them monitor the investments and they can report back to the investment advisor who can report back to the investment manager and so on and so forth. And the typical model here is cost plus. So the investment sub-advisor would, charge a cost plus 15 or 20 to the investment advisor. And what transfer pricing authorities do is that they not challenge the cost plus. They replace the comparables with asset management companies. Does everybody know what's an asset management company? So mutual fund, HDFC mutual fund will appoint an HDFC asset management company limited, which actually is comparable to your investment manager. You see that investment manager in your chart? HDFC asset management company limited is actually the investment manager, like to like. There will be differences, but like to like, because HDFC asset manager would actually do the investments. They take the final decision on what investments to make from that fund, and they'll also typically charge a fee, 2% or whatever. But there are regulations on how much they can charge. It's all governed by mutual fund regulations. So they stand there, but they take these kind of companies. They take proper investment bank like Edelweiss. Edelweiss is a proper investment bank. They do debt syndication, they do IPOs, they do investment management also. They will have some portfolio-based investment management. So they'll take people like HDFC Asset Management, Edelweiss. They'll take some of the debt broking companies, debt syndication companies. They find those comparables, and those comparables can have margins anything from 30 to 15, 16, 100% cost plus. And they try to apply those comparables. So I have two questions here for discussion. What should be the appropriate comparables? And if you have the appetite, is TNM the appropriate method? So let's discuss the first one. What should be the appropriate comparables to the functions done by the investment sub-advisor? And he is typically captive, so there are no internal cups. He only provides services to that investment advisor. He doesn't have any third-party clients. Yeah, cost plus is a fair model, but what kind of comparables should you be looking for? When you do your search, what kind of companies should you be looking for as comparable to the activities done by the investment sub-advisor?
The distributor of financial instruments.
Distributor?
Or advisors.
Agents, ma'am, what do they do, agents?
They basically advise the clients. Okay, that they have this is a better fund and this is a better depth and all that. Those type of agents are available in the
Mutual fund distributors.
Consultancy companies
insurance company.
because they are
Right. So I'm seeing a good direction here. He said, let's stick with consultancy companies. Because really what the sub-advisor is doing, he is advising as a consultant. Non-binding, he give 10 options, whether to choose 1, 2 or not, will depend upon the investment advisor. So he will give 10 options and the investment advisor will take it forward. He has no role to play beyond that. And he does monitoring, so he will send reports like, whether Modi will become PM or not, what is the state of the Indian economy, so that the fund can take decisions based on that. So that's like the consulting activity, right? So what kind of consultants will you look for? So okay, we are also saying that distributors of mutual funds, they are not doing any consulting. It's actually a network, an infrastructure service, where he has a network, he will have relationships with various, he'll have his relationships with people like you and me, and wherever a mutual fund wants to distribute, he'll reach out to 5,000 people, send them mailers, 100 people he'll meet, because ye mutual fund kharedo, ye mutual fund kharedo. That's a very different service from, and he's active to be more sales. He's a sales guy. This is a consulting guy. And his remuneration model will be, he'll have a percentage of the funds generated. You get 1%, 2%, loading, whatever that. Abhi to chala gaya loading paise, but they learn something on an ongoing basis. So mutual fund distributor is in my view not a good comparable. So consulting, financial advisory companies, research companies, CRISIL, ICRA, people who do research for a living. I'll research and give you reports. I'll research a company, I'll research an economy, I'll research an industry.
But he's not doing any research. He's just a sub-advisor.
That's what he's doing. He's researching. 10 companies will research and prepare a thick report and say, these are the reasons you could invest in this 10 companies. And he'll send the reports to the advisor who will take it
This
forward.
fund basically rooted by that fund who is a sub-advisor. So how can I compare with the nature and income in this particular sub-advisor?
But what is he doing? What is his function? What is his function as a sub-advisor?
Basically, this fund he has to go and give a consultancy to the Indian HNI clients of corporates.
No. Sorry. I'm sorry, I didn't explain the business here. The business is of investing the money collected by the fund abroad into Indian companies.
Okay.
So this sub-advisor is reviewing, and this is done at a very niche level. So they'll in 1 year review only 10 companies. They'll spend 12 months doing whatever analysis can be done of these 10 companies. They will.
And then I can think of nutrition.
Yeah. Sorry, my mistake.
It was the flip side.
But I think it would be low and technical, right? Because they are not the decision makers eventually. The decision is taken by the advisor or the manager.
The decision making and the risk
It's
is.
not the high and technical. I would say it is pretty much the middle level or the low level technical. That is in mind.
Okay, I'll stay with that. I've always find it difficult to define what is low end and high end. There is no definition, right?
Yeah, I mean the decision risk is not in the hands of the sub-advisor is what I'm trying to say. So that much.
So you're saying CRISIL is not a good comparable because CRISIL is high?
I'm not saying it's a good comparable or I'm not really sure if CRISIL does what exactly does, I'm not really sure. But I'm saying there's a difference between the advisor and the sub-advisor.
Absolutely.
Yeah, so that much when you're finding other comparables, I would not really go with companies which have that decision-making risk because then I'm not comparing the right, I don't have the right set of comparables for my company because then that they would be earning a higher portion of an income because of that risk that they take.
So let's stick with CRISIL for a moment. CRISIL creates industry research reports. What is the risk in creating industry research? So CRISIL is a good comparable.
Yeah.
So CRISIL type of companies you will take.
Why don't you take it as an entrepreneurship with like estate agents or estate brokers who show properties to various parties and they earn only on a success basis, but plus that they will be earning for whatever report that they will be filing on a cost plus basis they will earn. Like estate broker will earn a conveyance facility for showing various property which charge on a one-to-one basis. It's mainly an entrepreneurship.
Yeah, I mean, so entrepreneurship is the risk profile,
It's a risk
but
profile.
functional profile is that I agree in substance the estate agent is an advisor.
Yes.
He reviews 10 properties, he creates a portfolio कि कोई भी client आएगा मैं उसको ये दिखाऊंगा. But and functionally I don't disagree. The only thing is estate agents का financials कभी मिलेगा ही नहीं comparatively. But you will find comparables like CRISIL. But do you agree CRISIL is a good comparable? Because CRISIL is in the business of doing research.
Yeah, but
It's an entrepreneur.
yeah, you can say it in that way that it is non-exclusive basis. Like that research report is made available to all the entities. It's, whether this is a dependent agent or independent agent.
But you will assume it is independent for arm's length.
Independent, then still can work
Yeah.
if it is independent.
So you will fortunately find 5-6 companies like that. And those should be the right comparables, not debt syndication companies, not asset management companies. And that's the main dispute. And fortunately, tribunals have given significant relief to clients in these disputes. Comparables like these have been deleted quite favorably by tribunal consistently. There are CRIS capital decisions consistently. There is General Atlantic Partner decisions in Bombay Tribunal. There is CRIS capital in Delhi Tribunal. Consistently, 16% cost plus has been found to be arm's length for these kind of sub-advisory companies. The only word of caution, and we will not discuss it, is again whether it's, and this is the point he had made for a captive ITITS. Is it captive ITITS? So understanding whether the sub-advisor is actually doing what we are talking about, that he is merely advising, not taking decisions, only making recommendations, is a factual exercise that needs to be done and documented in the functional analysis. You may have sub-advisors who in fact, where he was saying there are captives who in fact do everything in India. Whether that is a fact or not needs to be established, and if that is a fact, then your cost plus will not work. It need to be something different based on the principles we discussed earlier. So